All right. What is up, traders? What's up, tycoons? Coming at you guys with a viewer request for Microbot Medical. Okay, this is ticker symbol MBOT. We're going to go over the recent news surrounding Microbot. We're also going to take a look, as you see here, it's had a huge, massive rally. Now, there's a critical level that we're looking at. I'm going to break that down for you guys, as well as go over a larger time frame, the weekly chart, and show you guys the major resistance levels and why we would be bullish above there and why we're not bullish if we're not above there. Okay, and then we'll take a look at things on the daily chart so you can see things even more clearly. So we'll look at multiple time frames. We're also going to use today's sponsor, Simply Wall Street, to break down some of the fundamentals of the stock. Now, of course, the content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, and commodities, crypto, etc., involves a significant risk of loss and is not suitable for all investors. Be sure to read through the full disclaimer. And we'll go ahead and start off with the recent news that has a lot of people's attention around Microbot Medical. Okay. Now, it's basically on its endovascular surgical robot, okay, which is the Liberty Surgical Robotic System. So this system is designed to navigate guidewires and microcatheters through the vascular system, eliminating the heavy capex required for dedicated staff cath lab rooms. Cath labs is short for catheter laboratories, where catheters are used for minimally invasive procedures and catheter-based procedures. Cath labs are equipped with expensive imaging equipment, including fluoroscopes. Now, the FOMO risks, okay, of jumping in right now is it's prudent to be aware of the risks involved. Don't let the fear of missing out, FOMO, force your hand in chasing shares. Microbot is a preclinical study development company. They don't have a commercial product and still need to conduct human trials on its Liberty robotic system. The company has been raising cash levels through secondary offerings. They did a $5 million secondary offering on October 21st, 2022, and they made a $1.4 million direct offering on May 22nd of 2023 at $220 per share. The company has no revenues and 18 employments. Any investments in penny stocks is pure speculation. So, you need to be mindful of the risks. Now, when it comes to the Liberty surgical robot, okay, it can streamline cath lab procedures combined with its one and done technology or other guidewire technologies. Liberty provides linear, rotational, and tip control, and it aims to reduce exposure to ionizing radiation and the need for heavy lead vests. The company partnered strategically on December 22nd of 2021 with medical technology provider Stryker Corporation to integrate some of Stryker's instruments with Liberty to address neurovascular procedures. They have been doing some preclinical animal studies, and on May 22nd of 2023, Microbot announced a 100% success rate for Liberty used in a European preclinical animal study. This news surged the volume and price of Microbot shares. The study comprised 6 European interventional radiologists performing 48 catheterizations to predetermined vascular targets with a 100% success rate of reaching the intended target. Vascular targets included distal branches of gastric, hepatic, splenic, mesenteric, renal, and hypogastric arteries. The radiologist found the Liberty system easy to set up and control procedures remotely and intuitively using the remote controller. Now, if we look at the weekly chart here, okay, which, this is a larger time frame. It is the weekly chart. Again, the main thing we want to pay attention to is these three levels right here. Okay, we have 633, 532, and $4.30 a share. Now, this stock has really recently gotten a lot of price upgrades and it's gotten a lot of attention. Okay, but the reason we're not bullish until we're above 633 is because these are the three major, okay, and most common and well-respected Fibonacci retracement levels. We have the 61.8, the 50%, and the 38.2. And you use these to identify trend continuation versus trend reversals because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you're going to move down, a retracement continuation of the trend, or move up, retracement continuation of that trend, right? And so if you take a look here, we've had a giant move down, and then we had this huge spike in the stock price, but look at where we came and found resistance at the 38.2% retracement level right here at $4.30 a share, right? So basically what that means is that this is just a healthy retracement, right? And we could have retraced all the way up to $6.33 for it to be a healthy retracement level to possibly continue the downtrend. Now, a rejection of the 38.2% level indicates a strong downtrend. So we really need to get back above here. And ultimately, we're not going to be bullish until we're above 633, right? Because I mentioned, spotting the trend continuation, right? So the move down, retracement, continuation lower, you can use the fib levels to spot that trend continuation, or you can also use them to spot reversals, right? So if you move down, retrace, and you start to consolidate and break through those retracement levels, then you can spot a potential upside reversal. Same thing to the downside. You move up, retrace, consolidate, break through those levels, you can spot a potential downside reversal. So ultimately, we need to retrace and consolidate and absorb some of the price action and flip 633 from resistance to support, and then we can push up higher and potentially get up to that $10 level. But that's a very, very far ways away from where we're at here currently. Okay, we're still trading currently under $2 a share. That would be over a 5x to go all the way up to $10. So tons and tons of work to be done. We really tried to put in an attempt here, but ultimately we weren't able to get above that 430 level. If we zoom into the next chart on the 1 hour time frame, so on a smaller time frame, we can see how clearly 430 was an area of liquidity, right? So if we take a look here, this is our zone essentially where all of the sellers stepped into the market, right? Sellers stepped in here, all here, and they ended up pushing the price much lower, okay, back down to this $1.90 level. Now, this is a really critical area, okay, because once we gapped up, right, and we had the announcement of the news on May 22nd, right here, we just discussed that news. This is where we opened, right? So all of this is new buyers right here. All of these are new buyers. And now those new buyers are back at break even essentially, okay? And so those new buyers, they're going to question themselves if they haven't taken profit up here or along the journey up through here, right? Now they're going to have to question, okay, do I want to hold shares? Or if we go below my entry price, right, at market open, am I going to sell? And there's something known as a gap down to fill, which is this blue box right here, okay? And if we actually go over here into the daily time frame, you can see it a little bit more clearer. And so what this is this is a gap on the daily chart, right? So notice how, we have the top of this candlestick right here, and then the very bottom of the next candlestick, okay, the bottom wick is right here. So that is what's known as a gap. And that's what this blue box is. These gaps, they tend to fill about 90% of the time in the market, everyone. Okay, so you want to pay close attention to those because those are trading opportunities and those are areas where the price could be drawn to. Now, gaps don't have to fill very quickly, okay? Sometimes they fill within a week, sometimes they fill within a day, sometimes it takes years or months for a gap to fill. But we can see here that we have that $1.90 price level right here. And if we break through there, there's a strong chance we're going to come back down and fill this gap just above $1 on Microbot, all right? So, you need to be very cautious if you're trying to FOMO into these things, off of these big, really, really big rallies. You have to understand why price is gravitating towards some levels. This is healthy retracement territory. And, once you start to see some sharp sell-offs, you have to understand some of the risks, and you have to understand, okay, well, this is where new money longs got in on the open after, the big push up on the event news. If we break through there, are those new money longs already short? Are they already selling, or are they potentially going to sell if we break lower and help price action drive down into that gap, right? You can see here on the RSI as well, this dotted line here is 70. You can see the stock was overbought at that level, and typically it's not a good idea to buy something when it's at overbought conditions, as the likelihood of a pullback is much stronger, okay? So that's it for some of the technicals. If we take a look here, we can talk about some of the news. Microbot medical shares fall 26% after $2.7 million offering prices. So, they're doing more share offerings here essentially, and Microbot's, it dropped after a $2.66 million registered direct offering priced at the market. The company stock fell 26.8%. And then the stock climbed to a high as $347 per share before retreating. A total average of 13.2 million shares changed hands, about 17 times the 52-week average on a percent basis. The stock is down 20%, 21% this year, and 51% in the last 12 months. And following the market's close on Monday, Microbot said it would offer $1.4 million of stock in a registered direct offering priced at the market. The stock's price more than doubled on Monday to close at $3.19 after Microbot reported positive results for its Liberty surgical robotic system. Now, we're going to use today's sponsor, Simply Wall Street, to actually dive into some of the fundamentals of the stock. And it's a really great platform. If you guys use the link in the description or the pinned comment down below, you guys will actually get a 14-day free trial and up to 40% off of your purchase for the first 100 people to join. It's a really great platform, and let me show you some of the things that it will pull up, right? And so what I want you guys to do is not only look up this stock, but look up your favorite stock that you're thinking about investing in, and it will give you some really nice graphs and fundamental analysis rather than just the technicals, okay? So if you take a look from a financial health standpoint, okay, it does get 4 out of 6 on the financial health. So, there's a couple things on there. Now, the two X's that it gets is a stable cash runway. So if you take a look at the cash runway analysis, we can see here that MBOT has less than a year of cash runway based on its current free cash flow. And, this is why they're doing these offerings, right? This is why they're doing that share dilution, is because they need the cash based on their free cash flow. And if you take a look at the volatility, okay, the price volatility right here, you can see that the industry average is right over here, and MBOT is extremely high on the volatility scale, right? It's more volatile than 90% of US stocks over the past 3 months, and its weekly volatility has increased from 24% to 48% over the past year. Now, again, when you dive into the financials, okay, these were the two areas where it looks bad in the stable cash runway and the amount of cash that they have. But their short-term assets exceed their liabilities, and their short-term assets exceed its long-term liabilities. So it does look good from that standpoint. When you look at the shareholder returns compared to the average market, or to the US market, you can see that the US market has outperformed this stock over the past 7 days, right? And when you look at its return on equity, it's actually got a negative return on equity versus the industry standard of 9.8%. So, these are all things that you have to consider. Remember, if you're investing in this company, most likely it's because you believe that they will be profitable over the time. You believe in the technology or the innovation or the solutions that the company brings. And, you need to be mindful of some of the risks, right? This is not a value stock or something like that that's going to be providing you stable free cash flow and different things like that. This is much more of a speculative, high growth, high risk play, right? And so, you can dive into the fundamentals a little bit more for this stock or any stock that you guys want using the link in that description below or the pinned comment for a 14-day free trial to really check out the platform. These are some other features. You look over here. Now, there's some interesting things about it that I like. What I really love about the Simply Wall Street platform is it also goes over things like the CEO compensation analysis. And so if you look, the CEO's total compensation is above average for companies of similar size, and his compensation has increased while the company is unprofitable. Now, some people might not like that. Some people may like that, and they may say that, hey, this is an incentive for the CEO to actually get stuff done with the company, right? If he wants to keep making more money, he needs to keep being innovative, and he needs to really create things, and see some growth in the company, right? So that's one way to look at it, right? Other people may look at it as a negative, saying that, well, why is the CEO getting paid more money while the company is not even profitable yet? That's not good for shareholders. Now, when you actually look at the top shareholders, okay, what's interesting to me is Vanguard is right here at number 3 on the list, okay? And Vanguard is a huge company that a lot of people are familiar with. We look at number 5, we have BlackRock right here as well. If you're not familiar with Vanguard and if you're not familiar with BlackRock, just Google search how big those companies are. And so, they do own a small portion. Vanguard owns over 3% and BlackRock owns over 1.88%. So, nothing massive, right? If you look at the current values of their positions, all right, BlackRock's is under $500,000 and Vanguard's is under 1 million, just over $750,000. So nothing life-changing, for Vanguard or BlackRock, but it is interesting to see two of the biggest names in the investing, space are actually invested in this company. Maybe that's something you would consider when looking to invest in this. Now, when you look at their leadership team, okay, and you take a look, their management team is seasoned and experienced with an average of 9.2 years in tenure, and the board members are considered experienced as well with about 5.4 years in average tenure. So, you can dive into the company a little bit more if we take a look at the ownership breakdown of the stocks. So private companies own about 3%, hedge funds own about 7.4%. We have venture capitals / PE firms, and then institutions right here. And the general public has a whopping 70.4%. So Shareholders have been diluted in the past year, with total shares outstanding growing by 14.4%. And, that's something that we mentioned, and that's something that's a negative catalyst on the stock right now is the share dilution and these share offerings. Okay, that's definitely something you want to keep in mind. Hopefully you enjoyed this video and this breakdown of Microbot, ticker symbol MBOT. If you did, smash that like button and subscribe to the channel. Don't forget to use today's sponsor in the link below or in the description or the pinned comment.